Good morning and welcome to my daily analysis videos with me, Richard Perry, market analyst at Hantec. On Wednesday, the 16th of December, it is the FOMC day today. We've also got the flash PMIs in the locker as well, but FOMC is obviously going to be the key focus for traders this evening, UK time. And we've got an expectation that the Fed isn't actually going to move on any rates, maybe tweaking a bit of the language surrounding quantitative easing. Potentially, if they go really dovish, they could change or increase the rates of quantitative easing. But I think that more the language around how long they're going to be doing it for and the conditions surrounding any changes ahead. Also, we're looking out for projections as well. But I think the impact that we're seeing on euro dollar is going to be interesting because we're seeing euro dollar now really testing this 121.75 level. It's been in effectively a little mini range for the past week or so, testing higher now between 20.55 and 21.75, looking to test for a breakout above 121.75. And that would complete this next phase of the breakout, I would say, that we continue to see buying into weakness. You haven't seen a decisive positive candle yet, really. You would argue that the positive candle that we saw driving the market higher last week, was that Thursday last week, was sort of negated to a certain extent on Friday, but then just sort of edged higher since then with a couple of slightly positive, but all in all intents and purposes a little bit neutral candles. But today's early run higher is interesting. It is testing that 21.75. Will it come on the a breakout in the wake of the Federal Reserve would be the question. Because you see that the technical setup is still very strong. You've got the RSI holding strongly in the high 60s. The uptrends are all holding and trading above moving averages. If I go onto the 4-hour chart, you can see, zoom out a little bit, but see this uptrend is pretty strong actually, and again holding moving averages support, rising moving averages they all are, and configuration is positive on momentum. Let's see on the hourly chart, again, trading above rising moving averages is always good. Buying into weakness, positive configuration on momentum as well. So it's all set up for a test of and a breakout of that 21.75 level. It just depends on whether it will be coming today in the wake of the Federal Reserve, really, I think. But the market certainly looks ready for that move. And an upside break above that, essentially you could measure that as 120 tick, 120 pip consolidation rectangle breakout, or you could go a little bit more bullish and maybe measure it as a flag pattern. But I think however you measure it, I think you're getting into the realms of 23 big figure, maybe 24 big figure coming further down the line. So I think that it really does sort of point towards an upside break and eventual moves higher on euro dollar. So we're still looking to buy into the weakness. Euro dollar looks positive on that front, certainly. Initial support coming in, I suppose if you look here, you'd say initial support around the 21.45 level. That reaction low that we saw at 21.20 is important, above the 21 big figure area. I think it all sort of adds to basis of support. So 21 big figure to 21.20 is a good basis of support now to buy into the weakness. On a very near-term scale, you'd say 21.45, but I think anything in terms of intraday weakness is a chance to buy now on euro dollar. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars and click to watch Trader Talks, our videos that give you top trading ideas.